All right, guys, welcome back to the Educated Homebuyer Live, where our goal is to help you buy right, borrow smart, and build wealth. This week, Josh, our lender, our resident mortgage expert, is not here, but I do have a special guest coming on this evening. His name is Mr. Dan Parker, also a YouTuber out there. Many of you guys might have run across him. If you haven't, you're definitely in luck. So we're going to bring Dan in here and welcome him to the show. Dan, thanks for being here, buddy.
What is going on, Jeb? I was just admiring your TikTok handle. I don't know what it is, but Mr. Jeb Smith just feels so right.
Dude, somebody stole Jeb Smith. Therefore, I had to be Mr. Jeb. I tried the real Jeb Smith. I tried like all of the little nuances that people do. Couldn't get it. So I became Mr. Well, and I never want to be referred to as Mr. Jeb Smith, by the way, just in case anybody out there is wondering. So Dan, let's introduce you for a minute here. So Dan, and I'm not sure even how we've met over the years, but Dan is a real estate professional, an expert down in San Diego area, runs a successful team down there. Also has a really good YouTube channel geared more towards San Diego real estate, and we often have people on here looking at San Diego real estate, so they'll probably check you out. But Dan, anything you want to say, buddy, to introduce yourself here? You're welcome to do it.
No, yeah, I think that's pretty much it. We both come on here. Our channels are definitely a little bit different. Yours is more geared towards, nationally helping people understand their finances and current market conditions and whether it makes sense to buy or not to buy. I really, really hone in on San Diego and Southern California. So, yeah,
well, that'll be good
to be here, man.
Yeah, no, we got a lot of people often asking these questions. Hey, what's San Diego real estate doing? And I'm like, dude, I don't know. I don't sell real estate in San Diego. So you're going to be able to address it. But before we do that, we're going to talk some headlines, right? We'd like to start off the show by talking about some things that have happened over the last week. We actually missed last week. I had some family issues happen back in North Carolina. I had to travel, so I canceled that. A lot of you guys had reached out and passed on well wishes, prayers, all that good stuff. So I appreciate you guys. I appreciate the condolences, all of that. It was a family member that took care of me as a kid and, good people. But anyhow, let's move along. So today we've got big news, if you will. CPI came out. We're going to throw some clips up here and put that up there. So U.S. inflation eased slightly, 8.5% in July. One of the things that I've talked about in other videos is that, again, interest rates being a key driver of what we've seen in the housing market for the better part of 2 years, right? A lot of, the Fed artificially, pumped up the market by bringing rates lower. I think that's fair to say, buying mortgage-backed securities, all of that. Well, what we saw earlier in the year, inflation numbers jumped. Fed started getting aggressive on the Fed funds rate. Volatility ensued. Rates jumped substantially. We saw as high as 6.25% in June. And I recently did a video a couple weeks back and basically saying, hey, listen, I think we might be towards the peak of interest rates, mortgage rates, unless we get a crazy number in August with the CPI, because the Fed doesn't meet this month, right? So the Fed only meets 8 times a year. September or August, they do not meet. And the last 2 meetings, we've gotten the CPI number, and then the Fed's met shortly after, and they've been able to calm the markets with the 75-point basis hikes and so on and so forth. This was the 1 month it was like, oh, crap, if we get a crazy number, we're screwed, right? I mean, the rates are going to jump through the roof. Well, we actually saw them come down a little bit. So inflation number came in a little bit less than expected. And what we saw initially was we saw the 10-year Treasury pull back, and then, interest rates pulled back a little bit. But by the end of the day, we'd actually given it all back. And so one of the websites I read, Dan, I don't know if you follow them at all, but really smart people, is Mortgage News Daily. And Mortgage News Daily, not only do they have their own commentary, but they often post other articles. And so what I thought would be helpful for anybody out there wondering, okay, inflation numbers came down, interest rates didn't really move, the market didn't really react. Why? Well, they went and posted this, and I thought, they even say it's an oversimplification, but I thought I would just read part of it to help those out there watching understand how the market reacts to this sort of thing. So basically said lower inflation allows for more economic resilience, and it's economic resilience that will do more than anything to prevent rates from falling very quickly. lower inflation also decreases the Fed's urgency to hike rates. And while that sounds like a good thing, it has been the austerity associated with those rate hikes that caused many investors to ramp up on economic weakness. So, the market's kind of in this situation where they kind of like the weakness in the economy, but they don't want the Fed overreacting. And so a lot of, they kind of said before that the market was already generally in agreement that inflation had topped off over the past 2 months. So the market was kind of expecting this. Therefore, the market gave them what they wanted. No crazy moves in either direction. So thoughts on inflation and I know this is a little bit different than what you normally talk about on your channel, Dan, but thoughts on inflation?
No. Yeah. And look, I lean on you a lot of times for this stuff because you're looking at a more of a macro level macro level than I am. But from what I understand and from what I've learned and gathered and heard from like Jerome Powell, they need to get inflation down to 2%. That's the number they're trying to get to. So the fact that it's starting to mellow out, starting to come down a little bit is a good thing. And hopefully it's only going to make things better. And as far as the market moving forward, hopefully things will mellow out because we're starting to see these numbers come down.
No, agreed. And I think the market, some other commentary I read that I didn't put in here was that now, the Fed is now going to see, okay, what we're doing is actually starting to work. We can still kind of, watch it. And that's what the Fed said last time. We're going to kind of watch and see what the market's doing and react accordingly. So right now, my understanding is that the market's betting on a 50 point basis hike. Still, the majority of people out there are looking for 50 basis points in September. So we've got another 30 plus days or so before that happens. But, now the market is expecting that, right? So if the market comes out and the Fed does what they say they're going to do, then that's a good thing. Now, if the Fed comes out and got super aggressive and did something else or said inflation is way worse, then we've got a problem and rates are going to move. A couple more slides here of things that I wanted to touch on. This one, I can't read it on this thing, but basically mortgage applications have picked up over the last week, 2 weeks. Why? Because interest rates have pulled back. If you're watching the market at the moment, this, you've probably seen it. We saw interest rates move almost 0.5% last week with the market reacting, the way that it did. So that was a positive thing. You could get rates, some people got rates in the high 4s. I think right now we're probably sitting just over 5. So good thing, people. Personally, I don't think it's kind of one of those conundrums, if you will. You want rates to go down, but you don't want them to go down so much that it starts stimulating a crazy amount of buyer demand again and putting us back in the same scenario, right? We're seeing inventory levels pick up in many markets. And we'll talk about that here in just a minute with you, Dan, in your market. But, what I've seen is I saw inventory pick up. I've seen it kind of moderate a little bit. So it's not at the pace that it was today here in Orange County, where I'm located, 4,054 homes on the market. 2 weeks ago, we're about the same. So we're not really gaining any traction. Here in Huntington Beach, 261 as of today. It's about where we were 2 weeks ago, right? But today we saw 12 or 13 new properties come on in Huntington Beach, and we're still sitting at the numbers we were 2 weeks ago. So there's still properties going into escrow. This is kind of normal, but a lot of schools are starting to go back in. The market's going to settle a little bit, and inventory is probably going to slow down here soon. And you just don't want buyer demand, picking up going into that time of year, because it could, put us back in a similar position, for next year. So,
we're seeing very similar things in San Diego. In fact, I think we're like just about the exact same inventory. We're just under 5,000 homes for sale. The interesting thing about the last slide that you just had about how many mortgage applications there are is, and we talk about this all the time on camera and off camera, is the data is usually delayed a lot of times.
Right.
So you and I, this is exactly what we were feeling 2-3 weeks ago till now. And now it's nice. There's some data that comes out that says validates our anecdotal experiences, with our clients.
And I think that's important. Like, when you're watching people on YouTube and any of these platforms, are they selling real estate? Do they have boots on the ground? It's not always necessary, but it just provides a little bit of context to some of these headlines. It's like, hey, listen, this is actually happening. One of the things I talk about sometimes, Dan, is that, you see the numbers from say the California Association of Realtors, right? They put out their data, and it'll say the days on the market is, went up from 11 to 14. And I'm thinking something's wrong, because the average home's not selling in 14 days anymore. It's probably closer to 20, 30, 40 days in some of these markets. And so having somebody out there saying, okay, this is what I'm feeling. Yeah, the market's slowing. Things are still selling, but it's not nearly as quickly as some of these numbers sound. Or maybe in adversely, when things were hot, you can kind of say the other direction, right? And have that conversation, things to bounce off of. So
yeah, that's how I felt in February, March, April, when it was like days on market, average days on market was like 2 weeks, 3 weeks. It's like, where are you seeing a home that's sitting on the market for 2-3 weeks? These homes are being sold in 3 days.
Exactly. And that's the thing is, and data is it's lagging in many ways. So just know what you're getting into, know the context, read the actual article, the details, and not just the headlines. Last thing, Southern California rents, $2,400 and climbing. Rents are still expensive, guys, and they're only going to get more expensive. Just because of the environment that you're in. Inflation is still a problem. It's not going to go away immediately. It's going to take some time to resolve itself. And you have to have a place to live, right? And so rents are, they're not going anywhere. They might not go up at the pace that they were, but they're definitely not going down. And Southern California is a unique market just because people want to live here, because of the climate and stuff year round. So all good stuff. All right. So, or I guess the rent's not good, but if you want
to just add a little bit onto that. So we had just pulled on, because you were on my channel last night, we pulled up an article about how San Diego rent, I think, was the number 4 highest increasing rent in the country in the last 12 months. And so, I'm I'm trying to remember that as best I can. I think it was 24% increase from this time last year. And I'm looking at the homes for sale right now. The average increase in median home value over the last 12 months is somewhere between 11 and 14%. I say that because what I'm looking on splits it down between attached and detached properties. So you're looking at literally double the appreciation of rent values as you are the home market values. And that goes to show a lot of times you have like a 6-month lag from what the housing market is doing to what the rental market is doing.
No, agreed. And I think, I put a property on the market for rent here in Huntington Beach last night. And it's a property that an investor of mine bought 5 months ago. And the time he bought the property, we were talking $4,300 a month in rent. We put it up at $4,800 yesterday. So that's a considerable increase from, 4 months ago. What, I don't know, what's the math on that? 10% almost, since he bought it. And I think we're probably going to get it based on the activity so far. So it'll be interesting. I'll continue to keep you guys updated, but just, again, it's one of those things. And we even talked about it, last night, is BlackRock just put together, filed the paperwork with the SEC for a $50 billion with a B $billion fund to buy real estate if the market slows down and or pulls back at all. They got money on the sidelines to start buying property. So it makes it competitive out there. So, but Dan and I here, we want to talk to you guys. We want to answer some questions. That's what's so awesome about, this group of people. You guys support us. You show up every week, you ask questions, and you make this thing possible. So if you do have a question, put it in there. Start with question before it helps us kind of pick them out, and see what we're doing here. Unfortunately, Dan doesn't have access to the questions other than looking at YouTube there. So, he's not in the know. So I'm gonna.
No, I can see him. I can see them. They're popping up on my end. Yeah.
Oh, okay. There we go. Good stuff. All right. So let's do this. Dan, please turn up your mic. It is a lot softer than Jeb. So I can turn mine down if we need to turn it down. I'm also right up in the face of this thing too. So, Jen, let us know on that front. You sound good to me, Dan. So, let's do this one. We got a question here from Sunshine Yogini. If I'm looking to buy, what's the difference between Zillow listings or MLS? Which is better? So if you were to get that question, Dan, how would you respond? Is there a difference between Zillow listings and what's on the MLS?
So is my voice a little better now, or is it the same?
You're good. I think you're good. Yeah, you sound fine.
So yeah, Zillow listings or MLS. Yeah. So basically, here's how it works. You put a property. Us agents will put a property and list it on the MLS, and then that will syndicate to a whole bunch of other websites, including Zillow and Redfin. So unless it's a Zillow-owned property, which I don't know that maybe there's some still out there. Their program of buying up homes and reselling them was a huge failure, which is interesting. What's going on with them in Open Door right now? Which yeah, very very interesting story. But yeah, what's better? Just know on Zillow, sometimes things can be a little bit delayed. Maybe, something will get entered on the MLS. Maybe it'll take 10, 20, 30 minutes, an hour, 2 hours to actually hit Zillow. Sometimes there are problems where the syndication issues from one site to the next. So sometimes it won't even pull up properties at all. That's happened to me, and that's a huge pain in the butt. And then there definitely are delays as far as a property being under escrow and accepted offer, where it will still say that it's available on Zillow, and sometimes it will be pending. So
yeah,
the long
no,
and
good.
short of it, yeah.
And the only thing I would add to what Dan said is occasionally you'll get properties that are in the MLS that don't syndicate to Zillow, because when Zillow became a brokerage a few years back, you essentially had to opt in to allow Zillow at that point to syndicate your listings, right? And some brokers out there saw Zillow as a threat and said, no, we're not going to allow you to show our listings because you're basically a competitor of ours. And so some brokerages said, no, you can't do it. Now that only hurts the seller, because, the more exposure, the better, and, what have you. But so occasionally you'll get a property that's in the MLS that's not on Zillow. So if you're talking to an agent, and working with an agent actually buying a property, have the agent actually set you up on a search too, just to make sure you're getting everything, because the MLS is the best place for that information. Because it's coming directly from the agents inputting it. But understand, like I tell all clients, the information's only as good as the person that input it.
Yes.
So occasionally, if you get too specific on your search criteria, you'll get properties that don't populate for one reason or another because they weren't entered correctly to start with. So just have a little bit broader, search criteria, but get it from the MLS, I think is your best option.
Jeb, can I give them the secret? Are you okay
Yeah.
with that? Hopefully this doesn't get.
I don't even know the secret. Let's hear this.
Hopefully this doesn't get taken down, you guys. No. So look, I just want you all to understand how this works, because a lot of people out there don't. I know people that just got into real estate don't understand how this works a lot of times. Zillow and Redfin, they spend a tremendous amount of money to have these wonderful websites that have a great interface, so they're easy to use. And there are some benefits to them. Like, I don't know of any other site besides Redfin where you can go on and you can search based on school ratings. Now, there are some issues with that, but it is kind of it's an integration with greatschools.org. Anyway, the thing to know about these sites, the reason they have all this money to spend on them is because there's a little button that says click here for more information. It looks like you're clicking and reaching out to the listing agent, but you are not. You're reaching out to a random agent here in Southern California that just spent $300 for your information. So just keep that in mind. There's nothing wrong with it. There are great agents and great teams out there that utilize this to get warm, hot leads. That's what they call them in the industry. Just know on your end, if you have an agent, if you're talking to Jeb, if he's helping you out and you have a property that you're interested in, send that property over to Jeb so that he can get some information on the back end, instead of giving all of your information to an agent that just spent hundreds of dollars for your email and your phone number. And you better believe they're going to be calling, texting, and emailing you trying to get your business.
For sure. I've actually got some really good stories of having a listing, an agent calling me saying, hey, listen, got a client wants to see your property. Can we see it? Sure. Coming this time, whatever. They show up. It's an agent that works for one of these sites, and they're meeting the client there that thinks they're meeting. The client thinks they're meeting me there because they push the button online. They get there and they're introduced to this agent, and the conversation is like, who are you? Well, I'm the one you talked to online. Well, I wanted to talk to him, talking about me. So it's like this mass confusion of who they actually think they're doing business with. Oftentimes you think you're talking to the listing agent and you're not. So just dig a little bit deeper, people.
Yeah.
All right. So I think Ben Savage coming in with some stellar advice here. Absolutely. There are not going to be a crash. Like Dave Ramsey said, certain markets will have a retracement, but this is the best, but this is the best time to buy is right now. So I don't agree with a lot of what Dave says, not because it's not good information, but I think he's a little more cautious than I am personally. I believe in a little bit more leverage. I believe in certain things and what his advice is sound advice, but I don't think it's realistic for a lot of people out there, especially in the market that we're in at the moment. But good advice, I think, and sound advice nonetheless. But here we go. So Dom's question says, here in Florida, there are more and more fraud listing for rentals than are occupied by owners. Have you all heard or seen this in your market? So Dan, it's funny. I was actually talking to a fellow YouTuber today, Christina Smallhorn.
Love
we were
Christina.
we were actually talking about this specifically. And so, have you heard of fraudulent MLS listings or rental listings rather?
So first of all, I just want to know, you just met Christina in person. How was she? She's great.
She was awesome. Yeah, no, dude, super charismatic. Just a big personality, which she's really, really good. So really great person.
Very giving person too. She's
very much so. Absolutely. Yeah.
Huge segue that no one cares about on here. That's okay. So as far as there definitely are scams out there left and right. I don't know. Do people still go to Craigslist? Is that where they're getting these scams? I'm not even sure where they're coming from, but
I do. I believe the Craigslist is one. I think Facebook Marketplace is another. People are putting on in some of these with fraudulent information. And it's common. I would say that I just read an article, yesterday or maybe this morning, I don't remember exactly, of one here locally. I believe it was locally, of someone that put a house out there, and it was something like, send me the money via Zelle and or PayPal to this, or Venmo to this thing. Don't go to the house. Don't knock on the door. That's an immediate red flag, people.
Yes.
When you're getting told not to do all of these things, and again, they make up a good story. Hey, it's currently tenant occupied or what have you. But if you're doing that, just call an agent to verify that information, right? I mean, it's like if you called me to verify that a rental's active, or what have you, I will do a little bit of legwork just to make sure you don't get ripped off. I don't need to make money on the deal. I don't need to do that. I will do, some due diligence to make sure you're in good hands. So, and I think most agents out there have, the same bone and body, that caring, if you will, to make sure that people aren't getting ripped off. And so, and a lot of times there's some common, some similarities in how they approach these, but, drive by. This one was told not to knock on the door. They knocked on the door anyway, and that's how they actually found out. It was an older couple, and they're like, "No, my house isn't for rent. We've lived here for 50 years." And it was like, whoa, and these people had no idea what was going on. So just go the extra mile, and don't send any money to anyone. Like, if you're not having a background check run or a credit report run, filling out a rental application, providing your documentation to somebody where they're, verifying and all of that up front, then it's probably a scam. And even some of those could be a scam too. So, just dig a little deeper.
I've even heard of scammers showing up to the property and saying, "Oh, it's tenant occupied, we can't go in," but at least showing face in front of the property and then getting money after that. So there's all sorts of stuff out there. I wish I knew more about rentals. I really don't, because there's not a system in San Diego for real estate agents to really, on a high level, help people find rentals unless they're looking for luxury, which is going to be put in the MLS a lot more often. But the suggestion from a lot of my clients and a lot of people that I've talked to is that Zillow is kind of the way to go, because they can pull the applications through Zillow. So it's not like you're giving that money directly to the person. It's going to be going through the platform. And I think it's going to be a lot more difficult to get scammed on somewhere like there.
Agreed. Yeah. And that's, again, just take the extra step, do a little bit more homework. And if it seems like it's too good to be true, that's really the red flag, right? I mean, it's usually the scam usually isn't a property that should be renting for $5,000 is renting for $5,000 and there's a scam. It's a property that should be renting for $5,000 and they have it listed for $2,000, and you see it and like, oh, that's a really good deal. Emotionally involved, want the property, get really invested, willing to send your money to secure it, and find out, oh shit, it's a scam, right? So that's the caveat. All right, I digress. Let's see.
It's an important
here.
topic. That's okay.
It is an important topic. So Kim has a question here, says, if you see a townhouse property listed for sale, but in the fine print, it says the land is leased. Can you explain what that means? So do you guys have any of those down there, Dan? Lease land?
Very occasionally. Yeah. There are some
Okay.
properties that are like that.
Got it. So we have a couple communities here in Huntington Beach. There's 6 or 7 that I can name off the top of my head that says lease land. So when you buy a property, there's 2 ways to hold the land or hold that property. One is fee simple, which means that you own the land underneath the property. Even in a condo, you essentially own your your space, if you will.
Mhm.
When the other option is when it says leased. Leased means you don't own the land, you lease it every single month. Now leases, depending on how they're set up, can be pros and there could be cons. I am not a fan of them personally, but that's a personal preference because of a lot of the way they're structured here locally, where most of them are set up on some sort of 20, 30, 40, 50-year term.
Sometimes
And
even 100. Like
some even
they
it's
could be
100
really
years,
far out.
right?
Yes.
And we have some of those here locally. But over time, as time goes away, we have several here, now that are pushing, 15, 16 years on the lease. That's all that's left. And so for one, a lender will
Yes.
only finance the term of your loan plus 5 years with regards to a land lease. So if you've got a land lease that is 15 years, right? If that's all that's left, the lender is only going to allow you to do a 10-year loan on that property because they want the term of the lease plus 5 years in order to be able to finance that. So you're screwed with regards to a 30-year fixed mortgage. And the closer to expiration on that lease, the more time that passes, the less time on that lease, in theory, your property value is going to go down unless the leaseholder is willing to negotiate, unless there's some sort of buyout plan to take over that lease, which most of them that I'm familiar with don't have those options, right? It's very much in favor of the owner of the land versus the homeowners themselves. So, the ones here locally, the lease documents are this thick. I mean, you have to have an attorney review them just to make sure
your stuff.
it's set up at the end. So just do your homework when you're looking at lease land. It's a lot like buying a manufactured or mobile home.
Yes.
You might own the home itself, but it's on land. Well, the difference in a modular mobile manufactured is in some cases you can pick it up and move it. Here, you're probably not picking up a house that's on leased land, or a condo in that case, it sits on leased land. It's a little bit different dynamic. You can't take it with you. So just understand what you're getting into there.
Yeah, for some people, like I would say a small portion of the population, that could be a really good deal. If you're looking for a property, if you have cash to put down and you don't have to worry about, getting out a loan, you might be able to get a steal of a deal on one of these properties when it's coming to the end of that lease land term. But
no,
for a very specific type of person that's looking for a very specific type of property.
Yeah, no, I mean, I have clients occasionally reach out and say, hey, lease land. And I tell them all the specific pros and cons. And they're like, guess what? I'm 85 years old.
Yeah.
I'm going to be dead by the time that thing expires. And I don't care what happens to it. And I'm like, all right, so be it. Yep. I mean, you know the downside, what's involved. You want to let your property just go to waste, not leave it to family? And they're like, I don't have any family. I don't care. Okay, fine. So again, it's a very specific type of person that doesn't care about that sort of thing, but just know what you're getting into. All right.
And usually, can I ask you this?
Yeah,
this
sure.
thought just came into my head. The land that's owned, is it usually government owned?
No,
like experiences
no,
that I've seen a lot of government owned stuff.
What's here locally in Huntington is it's a family that owned the land. And each one of these scenarios is a little bit different.
Sure.
But the family owned the land, leased it to a builder. The builder built a condo complex or what have you, and then leased it to an association, if you will, or a management company or what have you to run it. So it's actually owned by a leaseholder, but it's managed by someone else. And there's a pass through with regards to rents and what have you. There's also one here in Huntington Beach that's owned by a hedge fund. They bought it maybe 10 years ago, 12 years ago. Wow. Shortly after the decline in the market, they went in and bought the entire community. Nobody knows what they're going to do with it. But the interesting thing is it's very much, most of these are condo complexes. They're not single family homes.
Yes.
And so the plot of land in which they're built isn't big enough to tear it down and build houses that would make the same amount of money it would be just to keep those rental payments coming in. So they're very in a much better position to just keep it as it is and keep it a lease land and just continue to bring in those monthly payments. But the longer they extend it, the more willing people are to negotiate to get that extension. So it's there's obviously politics involved in that sort of thing as well.
That was a good question. I like that.
All right, let's see. We don't have a lot of questions, man. We got a lot of people commenting. Let's see here. Oh, we got Ambrose, two of my favorite local real estate YouTubers. So Ambrose, appreciate you watching. We got you, man. And even Charlton says you got this. So anyhow, trailer park you mentioned. Let's see here. Let's just go with some of these because they're questions that are easy to answer. Interest rates higher for second on vacation homes for all lenders. Yes. Yeah. Because there's a secondary market that buys these types of loans, if you will. They're all going to be priced accordingly. Typically lenders across the board are all going to be pretty close on all their types of programs, right? They might be a little bit better here and there, but there's not going to be big discrepancies on any programs between lenders, right? So if you got an FHA loan, all lenders are going to be in a narrow range for an FHA. VA, same thing. Conventional, same thing. Jumbo, same thing. Just varies here and there. And the same goes with investment and second home. So hopefully that's helpful for you.
And one thing that I know, or at least from my understanding, so we bought an investment property. I think we closed in March, April, somewhere in there. And the rules and regulations changed shortly thereafter.
They did. They changed May 1st. Yep.
Okay.
May 1st.
So,
yeah.
And you could probably explain it better than I would.
Well, it basically just got significantly more expensive to buy a second home because of the way Fannie and Freddie were buying loans on the secondary market. They didn't want more than a certain percentage of the portfolio going towards, I believe, second homes is how it was structured. And therefore, they were basically increasing the fees on them to limit the number of loans they were bringing in is my understanding of it. But
and we used that to buy an investment property. So it was the loan was a second home loan, but there are ways to get utilize that for an investment property. So from my understanding, they bumped that up because a lot of people were buying Airbnbs and things of them. They wanted to increase.
Yeah. I don't know if that was the direct reason. Maybe that's the excuse given, but
Sure.
But nevertheless, it doesn't really matter. Benjamin says, I'm under contract. Finally, I'm locked in at 4.99, 30-year fixed rate, no points. Should I pay down points now or wait to refinance when it makes sense? So, Josh was here. He would say the same thing. The numbers never lie, right? So what is it going to cost you to buy it down for one? How long is it going to take you to recoup that cost, right? So if it costs you 1% to buy down and you're only saving, $50 a month, how long is it going to take you to make that $50 back over the course of the next couple of years? So I don't believe in buying down the rate in the environment that we're right now, because I believe there's a chance for lower interest rates in the future. 6 months, a year and a half out, I think rates could go back down, maybe not to the lows. I actually said this yesterday, but I think that they will retrace some, which gives you an opportunity to refinance at that time. So I'm not a believer in buying points, especially if you're comfortable with the payment now. So, because if you do buy down points and rates go lower, and you decide to refi, it's sunk cost. I mean, it's gone, money's gone, right? So I would tell you to be patient and hopefully wait for a pullback. And then maybe you paid down your loan at that point as well, and there's an opportunity maybe just based on having more equity in the property at that time too. All right.
And in fact, we also mentioned last night just another option is going the complete opposite direction. You might be able to find a really good program out there for a 7 or 10-year ARM, adjustable rate mortgage, and get
absolutely
really low rates for the next 7 to 10 years. And obviously make sure, again, all the numbers make sense and that you're not going to put yourself in a situation where you can't afford a payment. But if I were buying a primary residence right now, I would bet on the fact that in the next 7 years, rates are going to come back down to where they're at or lower than where they're at today.
No, in fact, I mean, I'm looking at some property and calculating payments on what, different mortgages would be. Because again, me and my wife been looking at property and
That's
and
right.
what have you, and I'm looking at an adjustable rate as well. 7-10 years, just because for one, the rate's quite a bit lower. And again, like I mentioned, I believe there's an opportunity for rates to pull back, and so I'm comfortable with it. And so you just got to be comfortable and understand that there's an opportunity. If that doesn't happen, you might have an adjustable rate. So understand the downsides,
Yes.
understand, the positives and the potential, and know your risk and be willing to work with it. So that is the biggest thing, is just, understanding what you're comfortable with and moving along with that. So let's see here. GMP says, I feel that people don't understand that this is nothing like 2008. We are not having a housing crash, but instead a healthy correction, which will be the normal baseline. I couldn't agree more, GMP. So good stuff there.
You have a really intelligent community here, Jeb. I like these people.
We've trained them well, dude. We beat this into people every week. We just repeat it over and over again until they start repeating it back. And once they repeat it back, then we have other guests on like you, and you're like, wow, these people really know their stuff.
It's great.
No.
The comments I get are like, there's going to be a 50% reduction.
Oh, dude, just give it time. They'll come. They'll come. We're only 38 minutes in, buddy. They're 38 minutes in. And, that brings up something. So 38 minutes in, Dan, we're going to let you introduce yourself here in just a minute. But before we do it, going to ask those of you watching to, hit that, the like button, the thumbs up if you find any value at all tonight. Again, it helps us know that you guys, like what we're doing, and it helps the algorithms out there push out the content to more people. So as you're hitting that, Dan, people that just jumped on have no idea who Dan is. So who is Dan Parker? Why is Dan Parker on the show here?
So I love this transition. I thought you were going to go to a paid sponsor ad. I'm like, dang, is Jeb sponsored? Is Coca-Cola going to have a little?
Dude, I've just been trying to get Bang. That's all I want, is Bang just to come on and give me a drink once a week. That's it.
All right.
They won't even call me.
I'll see what I can do, Jeb.
Thank you.
So I'm a real estate agent here in San Diego. So Jeb and I live about an hour apart, and we keep talking about how we're going to go golfing one of these days. But we need to figure out exactly where we're going to go so we can actually meet up and play some golf. But yeah, I have a YouTube channel about moving to San Diego. I make videos about the local housing market down here and in Southern California. I make videos about relocating to San Diego, and make videos about things that are coming soon to San Diego. So very San Diego heavy. If you guys have interest in San Diego, definitely hit me up, or look at this little, follow me on Instagram right here.
There you go. Again, just search Dan Parker living in San Diego. Is that what it is?
It'll pop up.
Yeah, it'll pop up. Good stuff. Good content on San Diego, in general too. So appreciate you being here again, my friend. So let's jump into some more comments here, questions. We got Gracielle. So Gracielle is asking, can you briefly explain how supplemental tax works on new construction homes? Thank you. So let's explain what supplemental taxes are. So what happens here in the state of California, and this probably happens in other states as well, when you buy a property, the tax basis when you buy that property was based off when the previous owner purchased it, right? So if I bought a house 20 years ago, and said, let's just say hypothetically I paid $500,000 for it, right? So my tax basis here in California is essentially based off that $500,000, right? Because of how our taxes work. It moves a little bit, but it's really based off that $500,000. Now, say you, Dan, come to buy my house now, because I'm selling it, and now the house is worth $1 million. Well, your taxes are going to be based off the 1 million, not what I paid for it. But that doesn't happen immediately, right? It takes some time for the county recorder to reassess the property value because you changed it, whatever. So in the meantime, your property taxes are based off the previous tax basis, right? Which is lower than what you're going to be paying in many cases, right? Because right now, if you bought the property, and somebody's owned it for more than a couple years, you're going to pay more for it than they did. So the supplemental taxes is once the county reassesses, you get a tax bill in the mail saying, hey, listen, taxes have been reassessed. This is the actual value. You owe us this additional amount. But here's the caveat. When you do a loan, the lender doing that loan is basing your taxes that you're going to pay off of the purchase price, the new price. And so if you're setting up an impound account, an escrow account, whatever, there should be enough money in there based off the new tax amount that when you get that supplemental bill, you should be able to call the escrow company, the impound account that's holding that amount, and say, hey, listen, I got this supplemental bill. Is there enough in there to pay it? Because there should be, based on the way they calculate it. Now, new construction is a little bit is one of those things that I'm going to kind of say I don't really know how supplemental taxes work, unless the county has the previous value based off the land value in there. And then once you get reassessed, it brings in the home value, because there was never a home that they were assessing before. I think that's probably how it works. But Gracielle, if I believe you use Tyler, bought a house up in NorCal, Tyler can definitely walk you through that. And if you can't, you can reach back out to me and I'm happy to address it for you. But it's the difference in the original tax basis versus what it is now. So
do you think maybe referencing Melrose?
Potentially, yeah, and there might be some Melrose in there as well. But Melrose is also one of those things that only happens typically with new construction or newer communities because of the infrastructure tax. But the lender should be taking all of that into account when they're assessing your property taxes to begin with. So if your lender did their job, then all should be well and good. But oftentimes, the impound account holding it doesn't receive the copy of the supplemental, therefore it needs to be paid, so on and so forth. So just need to dig a little bit deeper. All right. Oh man. Let's see. Willing. You don't have Willing coming on your channel, I don't imagine. Willing is one of our resident, not sure what we're going to refer to it Willing as, commenter. We're going to use commenter.
I love it.
But good evening, Wolf. I'm Wolf. Dan and Miss Lego. Sushi is so fresh and in good supply. Branch manager flexed on me today. So Willing has become a loan officer. Dan, you look like a Roman gladiator. What do you look for in a loan officer when you send a client over there? The wow. I'm not sure what the wow is, but let's address the second part of the question. When you're looking to send a client to someone, what are you looking for in that person? The person handling your client's business.
So as far as what lender am I going to send my client to?
Not a lender in general, but like a lender. If you're going to refer a lender, why are you referring that lender?
Oh, yeah, that's a great question. Absolutely. So, well, I can tell you this. A lot of things in real estate you learn the hard way. In the hard way, you learn, when you work with a lender that is not good at their job, they don't, and a lot of it has to do with just responsiveness, their promptness, actually hitting the timelines that they said they can hit, being aggressive with their timelines ahead of time, educating the clients. And then obviously rates are going to be involved with that, but rates aren't everything. So the people that I suggest my clients work with have never missed a contingency period. They've never missed it. They always communicate when you respond, and they help educate my clients. So those are the types of things I look for. And part of it is just the smoothness of the transaction, which, to be fair, like most people buying a house, when they're looking and interviewing lenders, that's not what's going through their head. They're like, I don't care what happens. I just need a good rate so I can close on this property. But you would not believe the amount of stress that can be involved with a poor lender. I've had a lender in the middle of the transaction say, "Ooh, you know what? The closing costs are actually going to be $10,000 more than you thought that they were going to be because I miscalculated." I've seen all sorts of crazy things. So working with someone that's really trustworthy and is really good at communicating. My primary lender that I work with here in San Diego, we've done, I think, 10 transactions together so far this year, just the ones that we worked on together. A lot of my clients bring in their own lenders, and that's fine as well. But that's what I look for.
No, good stuff. I think that's what we want to. I mean, that's what I look for. I mean, I'm looking for somebody that's going to do what they say they're going to do, has a good track record, has expertise, can answer questions, and also is aggressive with rates and fees. And again, somebody that can perform. And typically that's Josh who's on here, right? That's who I'm referring most of the time. Especially if you guys reach out, you've probably been I've referred you to Josh. But if you need a referral to a lender, to a real estate expert anywhere in the country, I'll throw up a link here in a minute. You can go there. Happy to put you in touch with somebody that will guide you in the right direction and answer that question for you. But as we do that, I'm going to put you off here, or I'm going to put you on the spot here and say, Ryan, question from LA. When a seller asks bidders for a best and final counteroffer without knowing if you're the highest bid, what's your recommendation on how to handle? Increase it? If so, what's a proper percentage? So Dan, you get that question from somebody, an agent, whatever. How are you responding to your client?
Well, the answer that you're not going to want to hear is every situation is different. The first thing, like my job as an agent, is to find out as much information as I can. And if I've already established a really good rapport with this, let's say I'm representing the buyer, and I establish a really good rapport with that listing agent, hopefully they're going to give me some insights on what the sellers are looking for. What number are they looking to hit? Is there anything else specifically that could help put us over the top that's not going to just be a dollar amount? I've won on multiple counters where there's a best and final where we stay at the same price because we gave them the confidence that they need in order to close on that deal. So, that's kind of the way that I would look at it. The other way I would look at it is you on the buyer's end, know what your max is. What's the most amount that you would be willing to pay for this house? And if the property sells for $5 more or $100 more or $1,000 more, know what that limit is that you're going to be like, okay, I'm okay walking away at that point. Yeah, because that's how it works.
No, it is. And I think again, Dan touched on some good points, and know your max, know what you're willing to do and not do, have your line in the sand, if you will, and be willing to walk to the line in sand. And if your offer doesn't get accepted, be willing to walk away and be okay walking away. I ask clients all the time when we get a scenario like this and they tell me an amount, my response oftentimes is, okay, so that's your max. You said that's your max. What if the winning bid is $1,000 higher than you? Are you okay with that? Or are you upset because you didn't offer $1,000 more? Well, I'd be upset because I didn't offer $1,000 more. Well, then that's not your max. So, and I'm never trying to push somebody to their max, but at the same time, you've got to understand that negotiation is difficult when you don't know what the other side is willing to do, right? And we've come out of a market where, quite frankly, people are willing to do things I didn't think people would do. And so now as things are normalizing, I still kind of have a little bit of that stuck in my head. Like, hey, listen, I'm not sure I would quite get that aggressive, or I'm not sure what people are willing to do. Like I've lost out on 2 offers here recently where my client was actually willing to get more aggressive than I thought they should get. It didn't state it. I didn't say that. I just I let people do their thing, and they still didn't get it, right? Multiple offer situation. People were able and willing to go higher than they were. So I thought, wow, like people out there still are aggressive in this market. So know your max. Be willing to walk that way. Use escalation clauses. Like give a strong offer, but use an escalation clause, right? So if your offer is $450, again, making up numbers here, and you're willing to go to $475, maybe in your counter you go up some, but just put an escalation clause. Say, hey, look, I'm willing to go $1,000, $1,500, $2,000 above the highest offer up to this price. And do it that way versus, what I don't like to see is somebody that comes in with a lowball offer and then gives me an escalation clause going higher. It's like, you're just trying to game the system. Like you've got to be willing to play ball here a little bit in order to, for us to even consider your offer, right? Don't be the lowest offer and give me an escalation clause higher than everybody else. Be in the ballpark and then do it. So use your agent as a resource, right? I mean, if you have somebody like and trust is the key here. They should be able to guide you in the right direction.
Yeah, the escalation clause was one thing that I definitely wanted to mention. Also, keep in mind that it's not always just about price. Like you may put in an escalation clause and go $1,000 or $1 or $5,000 over the next highest offer when you would have won anyways because they liked all the other terms and conditions and the communication that you had going on. So, not a one size fits all. Make sure that you're working with someone that you can trust to guide you through this process that is closing deals in this market that is changing on a weekly basis right now.
That is a key right there. Actually, somebody that actually sells real estate
It's
and
crazy
doesn't
fast.
just, somebody that just isn't out there talking about it and actually performing, right? There's a lot of talking heads that actually haven't sold a piece of real estate ever. And so just make sure you got somebody that knows what they're doing, knows the market, and not using your mom from 40 years ago and hasn't sold a piece of real estate in, the last decade. Like things aren't the same as they were 10 years ago, right? So the market's changing. And so, all right, we're moving along. Lawrence Oliver, can you explain what an FHA loan is? So guys, before I answer that, can you let me know in the comments, audio, is audio good? Is it suck? What's going on here? I feel like it keeps going in and out a little bit on my side. And, I don't know if it's me or the actual, setup here. So
Sunshine
anyhow,
said they could hear me fine, so that's one there. Let us know, people. Let us know.
Yeah,
How do we sound? Because we have these really nice, expensive, fun, cool mics here that should be working great. But if they aren't, we'll mess around with them.
audio is great. All right, there we go. Perfect. All right, so Laura says, can you explain what an FHA loan? So an FHA loan is a government-backed loan that it allows you to purchase. I'm going to be very general here. Using lower credit scores in many cases, a lower down payment, higher debt to income ratios. That's kind of a one size fits all of what an FHA loan is. But it's a loan backed by the government. And because of that, there's a mortgage insurance involved upfront and monthly. And that's protection in case you default on the loan. We could get a lot more granular on what FHA is, but if I've got several videos that I've done on it. If you want to check my channel, guide you through the process on FHA. So, and if you have something more specific about FHA, you can put that in the comments and we'll try to get to it as well.
Now, also a follow up on that. So, okay, we understand at least somewhat what an FHA loan is. What are the main negatives of an FHA loan? Like coming from the buyer's perspective, coming from the seller's perspective when you're putting in an offer.
Good stuff. Actually, I have a video coming out Friday on that specifically. On that specifically. Yeah. He's not a plant, guys. I promise.
Literally had no idea.
Yeah. No, I think the biggest risk in this market. I mean, let's talk about it real quick, right? Some of the downsides: mortgage insurance, unless you put 10% down, is going to stay on it for the life of the loan. That's not a good thing.
Usually, you hit that 20%. Well, it's not going to automatically go away at that 20% threshold, but you can get it removed at that 20% threshold.
Exactly, right? So you'd have to refinance to get it off to a different type of loan. So that is a downside. FHA has an upfront funding fee, which basically if you put 3.5% down and you pay the funding fee, you're eating up almost half of your equity that you had to start in that property right to begin with, right? Because that funding fee is something that you have to pay. Sellers, in some cases, look down on FHA loans in competitive markets because of the minimal down payment. That could be a downside. Another one here at the moment that I'm going to talk about in detail is, in the market that we're in right now, prices move sideways. Maybe they even pull back some. You're in an FHA loan. If you have a short-term time horizon, you could be in a position where you owe more on the property than it's worth, which is a negative. So again, I'm going to kind of defer your question here a little bit just because I have a video coming out Friday where I talk about that in detail. But check it out. But Caesar says, is it true you can't get a primary home loan on a house if the home you own at the moment, plan to rent it out, is more square foot than the one you plan on buying? So, Dan, I mean, I know the answer to the question, but
no, I appreciate you asking me. I'm going to go ahead and say I have no idea. Here's the thing. Jeb was a lender in his previous life, and so he knows a lot of this stuff. When people ask me these really, really specific questions on the lending side, I refer them out to the specialists on the lending side. So I have no idea. I've never even heard this.
No. So here's the deal. It's got to make sense to an underwriter, right? So for example, if you own, a luxury property, I'm just giving a really clear example of how this works, right? Is your scenario might be a little bit different. Let's say I own $1 million property, right? And I'm looking to buy a $300,000 condo, 4 blocks from my house. The lender's going to look at that and go, how does this make any sense? Like, this guy lives in $1 million. He's just going to move to a condo and rent out his house. Like, the lender's going to say, no, that's probably an investment property that he's buying, or a second home, or something for a kid, or whatever. They might ask for a letter of explanation explaining the scenario. And if it makes sense, they'll do it. Now, so there's no hard, fast rule that says it can't be less square foot. But the deal's got to make sense to an investor. So say, for example, you own a 2,000 square foot home and you want to go buy a 1,500 square foot home. Well, why are you buying the 1,500 square foot home that's smaller? Well, maybe it's closer to the beach. Maybe it's closer to your job. Maybe it's closer to your kid's school and you want to move the kids. So that underwriter reads it, understands it. Okay, that makes sense why they're doing this. Or maybe they're boomers, or I'm sorry, not boomers. Maybe they're downsizing. Kids just went off to college. They no longer need the big house. They wanted something, that's smaller, kind of fits their needs now versus what they had, but they don't want to sell that property. They want to save it, keep it in the family. It's got to be explained. It's got to make sense. So
they could also be boomers.
They could be boomers too, but if the kid, but they probably didn't have the kids still living at home but maybe they did, maybe the kid's in the basement and never left. He's there forever. But anyway, so it's just gotta, again, so that's not an absolute, but it's got to make sense. So run it by a lender, and they should be able to kind of run it by an underwriter, and the underwriter will tell you whether or not it can be done. Daff. We're gonna go with Daff, like Daphne. Mm-hmm. Daphne. Got my LE today. Any chance I can get one of you guys to look at it to see if the charges are making sense? So if you send it to Josh, he'll look at it for you. I'd push you off to Josh to do that. I will throw his information up here in just a minute so you can do that. And that way you can get some certainty in what you're looking at. But he's out this week. He's playing golf. He's doing a member guest up in in the Washington area. So he's doing like 5 days of golf, this guy. So I don't feel bad for him at all. Zero. So anyway, let's see, Jeff, what would that supplemental tax scenario be applicable on a VA assumption for the new owners? It's a really good question, Jeff. I don't know the answer to that. When you're assuming, like you're assuming a mortgage. So VA allows you to assume somebody's current mortgage. If the property value is higher than it was when you purchased it, what happens is when there's a change of title with the county recorder's office, that's what triggers the supplemental taxes, is that change in ownership, right? The reassessment, right? So my guess is yes, it would still apply because you're the new owner of that property. The county is going to record you as the owner on that property when you assume that mortgage. Therefore, it's going to trigger that potential reassessment. But that's not 100%. I'm not 100% confident in that answer. I'm like 95%. So just talk to a lender and they should be able to answer that question for you.
I think the question would be whether the lender actually has the impound account for the extra funds, or whether you actually just have to pay that. I imagine they probably would.
Yeah, that is a whole different scenario there. Because VA requires impound. So again, run it by a lender. And if not, you could show up here next week and Josh can probably answer it for you if you don't want to call somebody prior to that. Let's see. Trying to get you some questions here, man.
Or you're so organized by having your people say question first.
Well, it doesn't always work. Clearly, I actually that was a Christina steal. I thought it was good, and she's actually trained them to do it. My audience is fighting back. Let's see here. So Romeo says, Jeb, how you doing? Bought my house in May in the Inland Empire for what I would say a premium price. A house down the street similar to mine has been in the market now for 60 days. Should I worry? So Dan, your client buys a house, 60 days later, home prices go down. Should your client worry? What's your response to that?
Yes, worry. Next question.
Yeah,
I'm just kidding.
I'm like, wow. That was the answer.
No, Jeb knows the answer to this. We just read each other's minds. Look, for one, there's a lot of information you're leaving out on this. What does that other home look like? Is it as upgraded? Is it the model match? Does it have the same view? Is it on the I guess it's on a similar street? Yeah. Is it facing a freeway? There's so many variables. Like, how is it overpriced? Is it underpriced? The market's really interesting right now. It has been for the last 60 days. Has been really like, man, that would have been a rough time to list your house. Like, you literally just missed like the craziness. It just started to kind of peter out. So what happened is 60 days ago, a lot of properties, they just assume, or a lot of sellers assume, the market was going to continue doing this. I mean, it was like almost vertical what was happening. And around 60 days ago, it just started to flatline, started to mellow out. So they're utilizing old data, old comparable properties that just recently sold. They're assuming, it's going to keep going up like that, and they probably priced it incorrectly. They probably overpriced it, and then they're in the situation where they overpriced it, and then they start slowly decreasing the price. I'm just assuming here because you haven't entered in all of this data. Maybe it took them 1 week, maybe it took them 2 weeks, maybe it took them 3 weeks to finally decrease the price, and they probably didn't do it enough at that point. So then you have this point where you're trying to chase the market that's like slowly coming down, but you're just above it, and it's going to make it a lot more difficult to sell. But really, all that stuff, it doesn't even matter. It doesn't matter. I would say, I guess it depends, where your home is located, because every market's going to be a little bit different. My personal opinion is I'm very, very bullish on the market. I know that over time, 5, 7, 10 years from now, the market's going to continue to go up. So if you're looking to sell your home in 2 months to flip it and sell your home, yeah, maybe you could be a little bit worried right now because there's so much volatility. It's really hard to know exactly what's going to happen. But as long as you're going to be in that house for a longer period of time, don't worry about it. Don't stress. You're making a long-term investment. It's just like stocks. They go up, they go down, and you just have to get used to that.
No, I agreed. I mean, I couldn't agree more. It's, if you're buying for the right reasons, the house of the value, the house down the street shouldn't really matter.
Yeah.
Just be comfortable with the payment. That's why we talk about all the time, being comfortable with the payment, having a little bit money in reserves, rainy day fund, if you will, and you set yourself up for, long-term success, right? I mean, Dan's channel, we did a video last night, and, one of the charts he brought up was a chart of home prices in San Diego County. And from 2008, which was basically the peak, if you will, in prices, to the trough and back to where the price was the same again, was about 7 years or something. So if you have that longer term time horizon, that's why we often preach that. Worst housing crash ever in history, and the market came back in 7 years. So that's where you're at. I wouldn't stress the house down the street. Don't worry about it.
Remember, like the 2008 housing market crash, the recession that happened was caused by the housing market crash, not the other way around. You don't just have recession. It's not every recession is going to cause home prices to come down. That was a recession that was caused by the housing market collapse, by all these crazy factors that were going into the housing market that, majority of them are not happening today. So yes, can home prices come down? Yeah, of course they could come down. They could come down tomorrow. They could come down next month, but it's a long-term play.
Good stuff. Good stuff. So if you are reading a comment or you're talking and I just start laughing, it's because I'm reading some of these comments. Like, some of them are laugh out loud, and I get a kick out of it. So
great community.
Good stuff. Ambrose here says, as a first-time home buyer with limited cash on hand, is there any reason why you shouldn't do an FHA loan? I'm a proponent of using FHA. I think there's nothing wrong with FHA as long as you understand all the nuances. You're comfortable with the monthly payment. Nothing wrong with it. Know the pros and cons. Like I said, again, video coming out Friday where I will talk about this in more detail. The risk of FHA in the environment that we're in now. Just again, don't use every dollar you have to buy a house. And I don't care if it's FHA or any house for that matter. You need a little bit of wiggle room there just in case something happens.
And just know when it would make sense to refinance from that. Like, know the 20% rule, understand the things that you could do down the line to be able to lower your monthly payment.
Good stuff. Good stuff. Let's see here what we got. Ryan says, my family and I are looking to move up to move up in house. Okay. We can move December 31st or wait until 2024 because I am purchasing the business, wait or buy now. So you're purchasing a business. Here's the thing, 2024, it's hard to say what the market's going to do. Case Schiller, Fannie Mae, who else out there? Like basically all the major CoreLogic, all of these guys are basically saying that there's an opportunity for home price appreciation to continue, right? Not at the rate that we've seen, but somewhere between like 3 and 5%. So if they're accurate, that means home prices in a year, 2 years are going to be higher than they are now. So if that's the case, are you willing to take the risk and wait and buy at a higher price, or are you comfortable buying now? I just, for me, it's about the right time in your life, right? You're buying a business. That could obviously be stressful. There's things that go along with that may make it a tough decision to make. And if that's the case, then maybe you wait. But understand that with waiting, maybe there's a higher cost. Maybe there's not. It's hard to say. But I'm more of like, hey, listen, I'm buying now because this is what I need in a house. And this is where I want to be and where I want to put my family and all of that versus trying to pick the date based on a certain time frame and what I think the market's going to do. So it's really not about picking a top or a bottom in the market. It's finding the right house that suits you and your family, being comfortable with the payment and pulling the trigger when it's the right time. And the right time is going to change. The right time for me is going to be different than it is for you. It's going to be different than it is for Dan. And so you've got to be able to navigate that. And I don't think there's a YouTuber out there that can give you a definite on that one. So is there a chance homes pull back? Sure there are. I don't think that by waiting you get, a home for significantly less. I will say that. So if that's your reasoning, then I say you buy now. But it really comes down to payment and if you're comfortable.
And what I would probably do if I were in your shoes, if I'm understanding your question correctly, is you basically have an extended period of time where you could potentially buy a house. I would start looking. And when the right opportunity comes along, or maybe start out submitting offers that are a little bit lower than you normally would have, or your agent would typically recommend for someone that wants a house tomorrow, and try and get a deal. And if you can't, then you slowly start ratcheting that up and become more realistic with what the market is. But now's the time where you might actually get an opportunity if you're willing to be patient.
I read some of these comments. It's hilarious. All right, guys. An hour in. I don't know if Dan knows this, but typically last year we did 96 hours of live.
Wow.
48 episodes. We missed 4 weeks all of last year. This year we're pretty much on pace. I think we missed 2 weeks total, maybe 3. I think it's 2. So if you appreciate us being here, you appreciate the content, you like Dan, you think he's got nice hair, you like his background in San Diego, hit the thumbs up, right? Yeah, he wants to see it, right?
Absolutely.
Guys, guest, we need more than when Josh is here. When Josh is here, he thinks it's all about him. It's really not about him, right?
Sorry,
so if you show us that it's not about Josh by hitting the thumbs up, we can show it to Josh and show him, hey, dude, you're really just another guy. Like you're nobody.
He's fired immediately.
Yeah, we will fire him on air. Just cut him off. But anyhow, that is that. I'm going to move along. And if you need a referral to a real estate agent, to a mortgage professional, there's a link below. One thing I didn't mention at the beginning of the video, there's actually a podcast, guys. The Educated Homebuyer podcast. It looks something like, where is it? That thing in the corner. If you search, you find that. Josh and I do a weekly podcast. This week is the first week we've missed since February because his travel schedules didn't coordinate. But we do a 30-minute-ish deep dive into a topic, on the housing. A lot of loan stuff on there, a lot of real estate on there, but it is very much a deep dive into one topic versus a lot of topics, a lot of questions on here. In addition to that, Dan, I don't know if you know this, but every Friday we take this content from Wednesday and actually put it on the podcast. So if you want to listen to this in audio form while you're, washing the dishes, washing your car, you're out for a run and want some motivation and want to hear Dan and I talk,
yes,
you can do that every Friday by taking, by listening. So go subscribe if you haven't already. All right. That was a lot that I just threw in there. Dan, I think
you're pro, man.
They want something more. They want questions answered. I think that's why they're here. We're gonna give you this, Dan. We're gonna get rid of that garbage there, and we're gonna say, what do you think of green kitchen cabinets, or just not your typical color cabinets? Any experience where your buyers or seller chose not to buy to buy or not to buy because of cabinet colors. So when you walk into a house, what do you talk to a client about? That sort of thing, visual, cosmetic stuff.
Sure. So, what I'm visualizing in my head is a super outdated kitchen from like the 70s and 80s with like this really like soft. I'm really bad with colors, but like this really soft like green. You know what I'm talking about? I'm sure you've seen 100
I
homes. Like,
definitely do. I definitely
so
do.
it's hard for me to imagine a home that just has these old cabinets and everything else is nice and upgraded. I guess the things to consider here, if it's just the color of the cabinets, if they're newer, nicer cabinets and it's a weird color, it's not too difficult to get that changed. And depending on exactly what the buyer wants, like let's say my buyers, they really like this house. We're looking at it. They just don't like the color of the cabinets. I would probably suggest, all right, well, if you need cash on hand in order to paint those cabinets, we'll ask for a $5,000 closing cost credit from the sellers. We'll try and get that out of them so that you can paint them and not have to pay anything out of pocket at the end of the day. So there's kind of that approach. The other thing that I'm thinking of is like, Jeb saying just something more cosmetic. A lot of times, especially when the market starts to heat up, is the homes that sell the fastest and are the most competitive and have the most offers and the most bidding wars are the ones that are like you walk in and it's like a model home. These homes that are flipped, brand new tile work, brand new kitchen, they open up the walls, new dual pane windows everywhere, and nothing needs to be done in the home. Those are the ones that the prices are just going to shoot up. They're going to be the hardest to get.
And still today, those are the ones in my market that are still getting top dollar.
The best properties I think that you can find are the ones that have old carpet. Yeah, but that's it. Everything else is fine. Like, you know how easy it is to change out carpet? You know how easy it is to put in luxury vinyl planks and then you get to choose a color? Like, it's so painless and it's such a good deal those are the types of things that you should be looking for.
No, agreed. And like, I mean, kitchen cabinets, if you're remodeling a kitchen and you're going to change cabinets, that's an expensive deal. But if you just if the cabinets, the boxes are good, they're solid wood, maybe outdated, different color, whatever, and you can paint them
and put some new knobs on them probably.
Yeah, paint's cheap. I mean, or lacquer, spray them or what have you. Inexpensive fix until you get to a position where you can actually do the kitchen if you want to do it. So I try to get people to visualize, like I tell people all the time, the two easiest things to change in a property are the paint colors and the flooring. It's not expensive to do in most cases, and it can be done relatively quickly versus, remodeling an entire kitchen, remodeling bathrooms. That stuff gets a little bit more expensive. But if we're doing putting a property on the market, and there's an opportunity to paint certain things, we probably do it to help it stand out. But like I mentioned a moment ago, I've talked about this recently. The properties in my market that are sitting a little bit longer outside of the ones that are overpriced, are the ones that are inferior properties to start with, right? The properties that are nicely redone, newer, all the upgrades Dan mentioned, those properties are still getting a premium, selling quickly. The ones that aren't are the ones that need some work. The ones that, inferior locations, the ones that should have never been selling at a premium over the last 2 years. Those are the ones that you look to get the deals on in this environment. So
also, Lawrence, thanks. I think you're cool too.
Ambrose, what area is equivalent to the peninsula in San Diego? So the peninsula here, I guess we're talking about Newport Beach. I'm not sure. Are we talking about Huntington Beach? What area is equivalent to the peninsula?
What I was thinking.
Peninsula. I mean, there's the peninsula in Huntington Beach. Maybe verify for me, the Ambrose, because we've got, Dan that's not familiar with Huntington Beach and me not familiar with San Diego. This is going to be a hell of a combination to come up with an answer. But we'll try.
I mean, if I were to guess before you said anything, I would have said Huntington Beach. So we'll go with that unless he clarifies. But as far as like Huntington Beach, San Diego, I don't know, it's just different. I guess
Newport Beach Peninsula. Okay, so Newport Beach Peninsula. So Newport Beach Peninsula would be, I think, more like, if I had to guess, more like Mission Beach area, Pacific Beach area, where there's expensive real estate on the sand, but it's very much kind of a local, still have the dive bar, still have all of that going on there. Yep.
North PB, North Pacific Beach, up into Bird Rock. That's what I would say. Somewhere.
Okay. Is that like super expensive real estate as well? And then you have some of the.
absolutely gets
Yeah.
pricey. It's over by the water. It's a little bit more laid back and a little bit less touristy, but you still have all the benefits of having all that stuff close by. Cool areas.
Yeah, well, this is definitely touristy, but nevertheless, sounds like but there's also good surf too. So in on the peninsula. So, yeah, call Dan, have a conversation with him. He can guide you. Let's see here.
Yeah, or La Jolla. I mean, just that's the other place I think of.
I don't know. I'm looking for some questions here, Dan. I got a lot of comments.
You guys start your comment with the word question. It's going to help Jeb out tremendously.
There you go. I'm going to have you come in each week to do that.
There you
go. Let's see. Emilio, I want a house on the water between Balboa and Newport Pier. How much am I looking? Shit, I don't know. A lot. Not really my market down in Newport in that area, but in the multi millions. Call me and we can talk about it. How's that? That'll be better.
You will go to that area for.
Oh, it's 10 minutes from me. It's just I don't have, most of my clients aren't looking for houses on the water in Newport Beach because of the $10 million price tag that goes along with them.
Yeah.
Let's see here. Lego, I mean, Willing coming in again. So Jennifer Lego is our moderator. So I don't know if you know Jennifer, Dan, but Jennifer is, started out here as someone just in the chat, showed up every week, was always commenting, basically said, listen, if you're going to be here, do you want to moderate? She said, yes.
Cool.
Took full responsibility and she kicks butt here in the chat often and kicks people out and it's all that good stuff. She bought a house last year. So congratulations to her. She actually used the information and did something with it. But with that, she stayed. She didn't even leave. So she's still here moderating the chat. So when you see people refer to Jennifer, that's who, or Lego, that's who they're talking about. But Willing, again, we just like to read these comments.
Lego, why are you letting this comment stay in here?
I understand if you have to delete this one. Dan the Gladiator has such a kind-looking face. I want to smack it and see if he wipes away that wonderful smile. Where does this stuff come from?
I don't know if it's a compliment or if he's, I feel like it's a compliment.
You think it's a him, but we think it might be a she. They logged in one time as someone else, and we saw a different profile picture. So we're unsure of who we're talking about here.
I just see Will at the first part of that, so I assume.
Yeah, but that's not. I don't think
you can't assume these days.
No, you can't. We need the pronouns after their name.
Yeah,
to know who we're talking about here.
Change so we can see your pronouns, please.
Anyway.
Lego, do better. Come on.
All right, so George just came in he's given us a super chat or $2.
Nice.
It says, what do you think will happen with the San Diego market? So Dan, I'm gonna defer this question to you and see what you have to say here, my friend. I'm curious too. What's going to happen to San Diego? Is it going to break off into the ocean and be an island?
Oh, that's a good question. All right. Here's the thing. In San Diego, I'm sure Orange County has a lot of similarities. We're obviously very close. We have very similar markets. We have very similar sized markets for sure. In San Diego, there's just not enough new construction. This last year was like the most, in 2021 was the most new construction we've seen in San Diego County in a long time. We just barely hit 10,000 units. For the past, I don't remember how many years before that, it was like in the 8,000 to 9,000 range. Nowhere near where we need to be as far as the amount of people that live here and the amount of people that are moving here every single year. On top of that, we have Apple just announced they're building a $460 million building in San Diego. A lot of the tech companies are here. We have biotech. We have defense. The Navy's the #1 employer in the city of San Diego. There's a lot going on in San Diego. A lot of high-paying jobs and more high-paying jobs coming here every single year. And myself, and I know Jeb as well, we're getting a lot of people on top of that are working remote, that are coming from Silicon Valley, that are coming from Washington, D.C., that are coming from these other like very expensive metros that are relocating to San Diego. So I really, really, truly believe, and of course I'm biased. I mean, look at this right here. I'm biased, but I really, truly believe if other markets around the country start to drop in prices, San Diego has a huge opportunity to remain higher prices. So, historically, we haven't had that, like, the really high paying job sectors that other places have in abundance, and that's changing a lot right now. So when I'm looking in the long term in San Diego, I'm very bullish. If I'm going to give you, like, let's just say the next 12 months, what's going to happen, because that's the farthest out that I feel comfortable, like, really giving an estimate on. Who the heck knows what's going to happen 2 years from now, 3 years from now, 5 years from now. But over the next 12 months, if I'm going to guess, I think we're going to be pretty much exactly where we are right now, plus or minus 10%. I mean, nobody knows, but I think I'm pretty confident, I can say pretty confidently, that I think we started to see prices come down a little bit. We're going to start to see them come up a little bit. And depending on interest rates, what happens with interest rates, we're probably in about 12 months end up around the same prices that we have right now. And then over the long term is going to continue to rise.
I like it. I agree. I think the plus or minus 10% is less than that personally. But obviously some are like San Diego, people don't understand how big San Diego is, right? So you have so many sub-markets in that market, right? So if you're in PB or you're in La Jolla, the market's going to react different in those markets than it is in Chula Vista. Or it's going to, in Carlsbad, right? I mean, it's all just, these are all little sub-markets of each other. The closer you get to the coast, the more expensive the real estate's going to be. The further you get inland into, Borrego Springs. I don't even know if that's San Diego County, but I think it is. The less expensive real estate's going to be. It's how it works. And it fluctuates. And if you want to be where things are at, you're going to pay for it. San Diego is what I think considered the best climate in the world. In fact, there's only one other country in the world that has a similar climate, and it's Chile. And it's just as far south of the equator as San Diego is north of the equator, has a similar feel and whatever. So that's not going to change, and people are going to want to be there. And the job growth and that only provides more stabilization for the market as a whole, right? Keeps people there needing to be there for work. And it's a lot like Orange County. It's not going anywhere. So that's good stuff. All right. George,
super chat
from George again. George, George, is that you?
Let it ride.
Are you trying to buy us out? It works, George. It worked. I want to buy in Mount Helix. Seems like a nice area and not overpriced. Thank you, guys. I have no idea what's is that San Diego, I assume?
Yeah, it's like La Mesa. So
okay.
It's going to be a little bit east. It's a really cool little, like, sub-market in San Diego. And
I know La Mesa. I actually know where it is. So
that if you wanted to go out and you live in Mount Helix, you would probably go downtown La Mesa. Like, that's where you would go. But it's such a cool sub-market. I think, like Jeb was saying, how San Diego is a big place, 3.35 million people. That is one of the areas that I think, even if other parts start to drop a little bit, it's going to stay strong there, because people live in Mount Helix and they never want to leave. Like, the people I know that were raised in that area and can afford buying a house over there, they buy homes over there. But you get these really unique properties. There's a lot of properties like on septic, so you have to understand the challenges and complications with that. But as long as, it's totally doable. You just have to understand everything that you're getting into. But yeah, really cool area.
No, good stuff. Yeah, it's funny. Like, so I moved, I don't know if you know this, Dan, but I'm from North Carolina, graduated college, moved to California directly, like 2 days after graduating. And people around me, in college knew that I was coming out here. We had, a group of people that started talking, whatever. And so one day I was in the gym, and guy says, I'm moving to California too. I was like, want to go together? And so didn't really know him. And we both drove across the country behind each other. This was before cell phones were a thing, but definitely not like they are now, right? It was.
So you just had your pager.
So we had walkie-talkies. So we would walkie-talkie each other, driving in the car. But nevertheless, his dad lived in La Mesa. And so we came to California. We lived in La Mesa for, a couple weeks before we found out where we were going to live. And here we are. Anyhow, cool. I was a short stint. I ended up in Orange County shortly after, but nevertheless. Anyway, so if you know somebody that has a similar story, It's probably him. It's a similar story.
What's his name?
I don't
say his name here.
I'm drawing a blank. I completely am drawing a blank right now. I do know it, and I can't think of it.
Jeb's first and best friend in California, and he doesn't even remember his name.
I'll figure it out. It'll come to me here in a minute. I will definitely say it, but I don't remember it. Al Bundy says, what is approximately the cost for new flooring and interior paint for a 2,000 square foot house given middle grade material? So a little bit difficult to answer in some ways because is it 2-story? Is it 1-story? Are you doing flooring up the stairs, both levels, or the vaulted ceiling?
Material?
So yeah, like, the stairs for things like hardwood, things like LVP adds a huge cost because of all the cuts it requires in order to do those stairs. So when you do new flooring, when I think new flooring these days, I'm thinking hardwood or some sort of LVP, the luxury vinyl planks, because that's what's popular out there. So going upstairs adds cost significantly. If it's a single level, 2,000 square foot house, I mean, you're probably looking at, with materials, depends on who installs it, but I would say, 10 to 15,000 ish is probably a reasonable number. Unless, like, for example, I just had a property here in Huntington, the rental that I mentioned earlier, we were initially has Spanish tile all throughout it. And we were going to demo that Spanish tile because the entire house is Spanish tile. We were going to do, but to demo that Spanish tile was going to be like a super expensive job. And therefore we said, you know what, it's a rental. We're not doing all of that. So that's how all of these things change. And it's very difficult to give a cost without knowing. Paint on a 2,000 square foot house, I would say, is probably $4,000 to $5,000, to paint the ceilings, the walls, baseboards, doors, that sort of thing. Would be my guess. Somewhere in that ballpark, unless it needs everything. Now, and if you start talking about it, exterior and all of that, that's a whole different animal. But I would say $4,000 to $5,000 is probably reasonable on the paint, unless you got super high ceilings and a lot going on.
So somewhere between 15 to 20. You could probably find cheaper. You could probably find more expensive.
Yeah, no, absolutely. Again, a lot of it depends on who you're hiring it to do.
Yeah.
I mean, who you're hiring it to do. Who you're hiring to do it.
Yeah, man, Jeb. It's all good.
People put me on the spot, man. It'll be repeated like over and over again. Well, dude, you said no, I didn't. I corrected it. Ambrose is our biggest fan tonight. Wants to know coolest guy, or I can't read clearly, but wants to know if there's anybody else in LA covers the LA market like us. I'm not familiar with anyone personally that just does like the LA market. That's not like, there's a couple of guys in that market, but they're all like doom and gloomers. Like, yeah, I have a hard time watching any of the content, and therefore I don't. So not really specific on anybody in that market that does YouTube. But if I do, I will mention it here at a later time.
Well, and don't forget Jeb's little link below. He can definitely connect you with someone out there. But as far as someone that YouTubes in LA that is as cool or even near as cool as us, I don't know off the top of my head.
Good stuff. Let's see here. M. Hewitt. If I told 20-foot setback wouldn't stop me from putting in a pool. If I was told 20-foot setback wouldn't stop me from putting in a pool by the sales rep 6 months ago, and now it stopped me from building past it, can I cancel the contract and get my money back?
Can you click on that one?
This one here. Oh, sorry. I thought I did.
No, that's okay.
Yeah. So here's the thing. We're talking no longer about real estate. We're starting to talk about pools and contracts and whatever else. I don't know the answer there. If your contract is changing, because of something that you were told or whatever, and it's in the contract and that's no longer the case, I would say that you probably need to get an attorney involved that can handle that for you. Yeah. So, other than that, I got nothing for you.
We are not allowed to give legal advice, unfortunately, but you probably should talk to an attorney if we're understanding this correctly. Yeah.
Good stuff there. So let's see what we've got. You can see questions over there. You see anything? You're not going to know this one, but in my market here, I live in La Habra. The prices here are going for over $1 million or more. Are they overpriced for the area? What does overpriced mean? Right? When we kind of had this discussion last night, what do you mean by overpriced? Is it, are values higher than people want to see? Sure. But are they higher than people are paying? If the answer is no, then they're not overpriced. If the home is selling, if homes are selling at those prices, then the market is telling you otherwise. So it's I see it as a black and white answer. I realize there's some gray in there. It's not quite as easy to decipher, but as long as homes are still selling and they're selling at those prices, then the market is telling you that they're not overpriced.
Yeah, it's such an interesting thing to say. Like, homes are overvalued. Well, value is what buyers are willing to pay. So it's obviously not overvalued. But what I think what people are always getting at when they're saying that is, what does the future hold? Are the prices going to start coming down? And, over the long term, no, absolutely, they're not going to come down. 10 years from now, those prices are going to be worth those homes are going to be worth a lot more money than they are today. Could they go down a little bit before they start to come back up? Absolutely. And Jeb and I don't know to answer that, which is why the best advice we can give, which is advice we've been given over and over and over and over again, is don't try and time the market. Just know that you're buying these assets over a long period of time. You're going to win.
All day. So this one's a little bit difficult to answer, but we're going to see what we can do here. Samson says, I have a person I know that wants me to take over his home. He got via family hand down, I assume, has $30K mortgage and wants 15 to take over. I don't understand the 2-1 lock, blah, blah, blah.
Two
whatever.
bed, one bath, maybe?
Yeah, maybe 2-bedroom, 1 bath. Sounds like it's in Indiana. I don't know. What are the most important things I should consider? So first off, I'm assuming he wants 30 on the mortgage plus an additional 15, so 45, because if you only give him 15, there's not enough to pay off the mortgage. And that's clearly a red flag. So what I would tell you before doing any of this is talk to a local agent there and just have a conversation and say, hey, this is the case, and have them walk you through it. Right. I would still get inspections. I would still do some of these things. You want to make sure you're not getting a property that's, has some major issue, or that the value's not there or whatever. So again, I think you got to read a little bit deeper into this. I mean, it sounds like you're getting a good deal, but just make sure that's the case by doing a little bit more homework. And you can do that by talking to an agent locally. Having that conversation with the agent's not going to cost you. It shouldn't cost you anything. And maybe in some cases, there's going to have to be paperwork going back and forth and certain things filled out. Maybe you guys can come to an agreement and get an agent involved, give them something to facilitate the transaction, and everybody wins.
Absolutely.
All right. Let's see. If a tree on a property is messing up the property fence, do you think I can get the seller to remove the tree? So I'm assuming you're buying a house, staff, and the tree is pushing on the fence and you want that removed. Listen, everything in a property is negotiable. You want the dog? You want the dog. Literally, I'm not being funny. I'm saying ask for what you want to ask and see how the seller responds. And if the seller says no, you have an opportunity to re-ask again. If it's important to you, then ask for it. Cutting down trees and that sort of thing, depending on how big the tree is, there's expense involved in that. And some can be, more costly than others. If it's a health and safety issue, it's probably more, in my experience, health and safety issues get addressed more often than anything else. Versus something that's cosmetic or something that's maybe out of date where codes have changed. That stuff is a little bit different because the seller's like, well, hell, I've been living here for 20 years and it's never been a problem. I don't want to do that. Versus, hey, look, this is causing a bigger issue that could lead to something else, whatever. So just understand your place and try to negotiate it. What are your thoughts there, Dan?
Yeah, totally. I mean, look, if you ask for them to do it, there's 3 things that they could do. They could do it. They could give you some type of credit to supplement, or they could say no, in which case you're just back where you started. When I first started in real estate, I was a lot more reserved with my clients. No, we shouldn't ask for that. Well, we shouldn't ask for that. And part of it has to do with whatever type of market you're in. I think we're in a market now where you can ask for these things, push that on your agent. Hopefully you have a good agent helping you, and let them do the work of trying to negotiate it. Sure, sometimes it's an uncomfortable conversation, but that uncomfortable conversation might get you a credit, or might get you that tree cut down, or might help you get something else that you're asking for. So it doesn't hurt.
The dog.
Yeah, the dog.
Yeah.
Skippy.
Yeah, no. So again, it never hurts to ask. The worst they can say is no. And like Dan said, you're back in the same position. Here's a good question. one I like.
And then I have a question that you can pull up after this.
All right,
Or
awesome.
comment.
Would you use luxury vinyl in your primary residence, or does it lower your resale value? So here's the deal. I have luxury vinyl in my house now, and we could talk about why I installed that. So the flooring I have now was installed. Shit, I haven't lost. Maybe COVID was 2 years. It's probably 3, 4. It's probably 4 years old at this point, maybe 5. The reason I went with it is because like we were just trying to decide between a real hardwood and that. We didn't want tile, like the porcelain wood planks, because it was too cold. I have young kids. At the time, they were younger than they are now, but now they're 10, 8, and 4. They wrestle. I wrestle them. We're all over the floor. It's hard, right? You hit that stuff, it's going to make a dent. And so therefore that kind of ruled that out. The cold to the touch and all of that stuff when you're walking around all the time, not ideal.
And it can break.
Yeah, the second thing was hardwood. I was battling my wife against hardwood. And I swore that I could tell the difference between hardwood flooring and luxury vinyl. And so the reason I wanted hardwood is because I thought I liked the way that it looked better. And she was kind of against it, saying, listen, the kids are going to scratch it. They're riding skateboards in the house and doing crazy. Their kids are just going to whatever. And whatever. So one day she brings home 2 samples. It's on a board. No. Yeah. That's what she did first. She laid it. It was on a board and she laid it down.
Cookie. I like this.
And she said, which one do you like? And I said, well, I like them both. And she said, well, walk on them. Which one? Blah, blah, blah. And so I stepped on this one. I was like, I like this one. She's like, that's luxury vinyl. It's LVP. And I was like, interesting. So what she then went and did was bought a box of it from a store and laid it out on the floor. We just put it together, that box on the floor right there, and showed what it would look like and walked on it right there. And I was like, yeah, I'm willing, I'll do it and we'll do it. And it was a third the cost of the hardwood was, and it works. It does it hurt your resale? No. I mean, maybe if you've got a $10 million house, multi-million-dollar house.
Yes.
Yeah. That's going to hurt you. But the majority of people out there aren't living in those homes, and it's not going to affect your resale. But if you go really cheap on it, maybe. Yeah. But the stuff out now has distress in it. It looks good. The colors are good. It's waterproof. I mean, that was another thing the reason we chose it, because kids running around bare feet, wet, whatever. It's easy to clean. So.
Yeah, luxury vinyl all the way. My parents have a home. It's about 10 years old. And 5 years in, it had this really nice, like red hardwood floor. And about 5 years in, it got so scratched up. They were so tired of it that they ripped that out to put luxury vinyl in. And the luxury vinyl looks better. But the problem is, here's the other thing that you have to consider as well. When you're buying wood, wood can expand and contract. So there's all these challenges that you get. A lot of times they're just going to glue it down to the floor, which makes it damn near impossible to remove. I mean, the removal of their hardwood before was like, I think over a full week, and their place is only like 1,300 square feet, and no stairs or anything like that, because you have to cut it into these little squares, and then you have to scrape them off one at a freaking time. So you also have to consider that too. If you're going to live in this house for a long period of time, and you ever need to replace it, it's a huge pain in the ass. Can I say?
No, it really is. Yeah, no, absolutely. Yeah, no, it is. I mean, and that's the thing is, like, my buddy owns a flooring company, and he's the one that ended up saying, like, dude, go with the LVP. And he was like, honestly, like 5 years in, the kids scratch it up, whatever. Because it does scratch. People say it doesn't scratch. It scratches, right? I'll tell you it scratches. But you could replace it, right? And you're still less expensive than you were had you done the hardwood initially. And you've got a whole new flooring a couple years later. So there you go. So you had a comment.
I just had a really good comment at 6:15 from Nightbot. I think you should probably pull
Nightbot. There we go. Nightbot. Do you use Nightbot?
No.
Yeah, so Nightbot's free. It's just a service out there, and you can type whatever you want in it, and it shows up.
Oh, so that's not an actual person?
No.
So you put that in there?
Yeah. Yeah, it comes on like I think it's set at every 15 minutes.
Nightbot coming. I thought you just had like a really cool...
So like Nightbot.tv or Nightbot.ai or Nightbot something. Go in there. It gives you analytics on your channel and all that stuff too. It's good stuff.
Okay, so I'm
Yeah, you
gonna
can.
sign up for that, and I'm gonna go to Mortgage News Daily.
Yeah,
Looks like
dude.
that is.
If you're in our space, Mortgage News Daily is a really good site. Not only because they they give their own commentary on rates and all of that, but like it's like old school like stack type content where they literally the bottom of their channel is news all across the industry. So if you want
Cool.
something that's happening in the market, there's an article, they show it. So it's good stuff.
Awesome.
All right. Ty Youngblood says, hit the like button, people. It helps get the word out. Likes up. Ty, dude.
Tybot coming in clutch.
Ty Youngblood, that's got a hell of a little avatar thing there. The logo.
Yeah.
Do we think Ty Youngblood's a YouTuber? Or just somebody that just has a really good signature and wanted to put it on their thumbnail?
Yeah, maybe he's asking for people to hit the like button on his channel.
Hey, listen, whatever, man. Whatever. we promote it all here.
Someone go check it out. Let us know what it is.
All right. Ambrose, do all lenders offer FHA loans? No, they do not. Many banks don't do them. Talk to a broker. That link that you see scrolling there that I forgot to take off, that will get you connected to a broker. Those brokers do FHA loans. Yeah, so not all lenders do them. You guys, we've run through questions here, so I don't know what to do. Dan, for those of you watching, don't know who Dan is. Dan is a YouTuber in San Diego. See that in San Diego in the background there? Got a really cool setup, much better than mine. This is very plain. There's no color here.
Yours has come a long way too, though. We just keep getting a little bit better each time.
The window behind me really screws things up just because I can't block it, and the light that comes in from it all the time kind of messes with the light in here.
Lighting is the nemesis to you.
Now it really, my lighting's never great. Your lighting's pretty good, but nevertheless, I digress again. I've done a lot of that this show.
It's okay.
And Dan just gave us almost 2 hours of his time, people. Hit the thumbs up. 110 likes. You guys are slacking, man. There's 160 people here. And I know all of you weren't here the whole time. Hit the thumbs down, too, if you don't like us.
I'm surprised we haven't got more market questions. Like, what is going on with the market right now?
I know this is actually pretty weird. These people they don't trust us.
No one has told us the market's going to crash. Well, I saw one that was like the market's almost going to crash.
Oh, we got to go back, and we love those. We love talking about those. Is it a good idea to talk to a lender before 6 months of purchasing a home and have an idea of payments and affordability? Absolutely. 100%. If you're considering buying a house, even if it's months away, talk to a lender. 6 months, 8 months, it doesn't matter. And you might have reservations about running credit and all of that. That's okay. Yeah. If you can give them your monthly debts, maybe your credit scores. It's not going to be 100% accurate, but at least they can kind of lead you and say, listen, based on where you are now, an idea of purchase price where you want to be or monthly payment, this is where you should be. And you can figure out, okay, am I in the right position to do this, or do I need to save more money, or do you need to work on this or that or what have you? It just puts you in a better position to know where you're going to be. And lenders, they're most of them are willing to have those conversations because
the good ones
it's business for them later on, right? Mm-hmm. So that's again an opportunity for both of you, the lender and you as a potential buyer, to know where you stand. So Loris just says, what's going on with the market, Dan?
There we go. Jeez, I thought that's what I was coming on here for. You asked me all the other crazy questions, you guys. Like, come on.
Yeah, Dan, there you go. Let's see here. So no, let's just say let's kind of put you on the spot here. Last 30 days. Markets. Here, let me ask you a better question. Are you seeing any huge price declines? Are you seeing any deals on property? Because I think that's really what people want to know.
Okay. So, I could start this by saying, I had a consultation with someone who found me on YouTube and reached out, and we had a consultation yesterday, and I could just see it in their faces during this consultation that they just were convinced that home prices were just going to go like this, and they were just going to swoop in.
Oh yeah,
get this 3-bedroom, 2,800 square foot home, beautifully refurnished, with a pool, over by the water for $1 million. And I could just see just slowly the life being sucked out of them as we're talking about what's going on. So can you find deals in this market? Yes. I just had clients that got a home for, like, this home was for sale for $700,000. Comparable properties. I mean, not even comparable properties. This is a townhome. So there are exact model matches that sold 2 months prior for $715,000. We got our offer accepted $640,000.
Fantastic.
Can you find deals? Absolutely, you can find deals. You aren't going to get that on everyone. That's not what the entire market is doing. So I think what we saw over the last, I should really go back and look and see like exactly the time frame, and I'd be curious how much this you're experiencing in Orange County as well. But somewhere around like 2.5, 3 months ago, the buyers just said, "Ooh, let's just hold off a second and let's just see what's happening." Everyone's talking about recession. I still can afford buying a home, but like it's getting a little bit tight, and I just want to wait and see what happens. Because we were in the toughest market for buyers basically ever here in San Diego at the beginning of this year, and that's not an exaggeration. It was absolutely crazy. And then at the same time, a lot of sellers were trying to hit the market at the very beginning of summer and thinking, all right, this is the top of the market. We need to put our home on right now and capture the top of the market. So it just created this really unique scenario where there weren't a lot of active buyers and there were a lot more sellers out there. And so because the market shifted so quickly, if you find the right seller that's motivated and is overreacting to the market, then they might accept an offer that is well below what they should be accepting it at, because, oh my gosh, you had to wait 2 weeks or 3 weeks to get a good offer in. Now what we're seeing, for me, it's been about 3 weeks, is it's starting to neutralize. The sellers are starting to understand, okay, we don't have to be terrified that prices aren't going to continue plummeting. Buyers are starting to realize that, okay, it's just getting back a little bit more towards a neutral market, as opposed to, we're not getting to a buyer's market. It's just there were sellers that were overreacting and sellers that were overpricing homes. So as a buyer, you have a lot more opportunity for inventory right now than you did anytime pretty much the last 2 years. You might be able to find some deals out there, but we're not talking, 10, 20, 30% under asking in majority of scenarios, but you might be able to get it a little bit under asking. You might get terms and conditions that are better for you. You're probably not going to have to waive any contingencies in order to get that property. So you have a lot more opportunities as a buyer. It's so easy to forget how the market was a couple of months ago for people that have been sitting here waiting. Like they just don't realize how tough it was in February, March, and April to get offers accepted. Jeb, I'm really good at getting offers accepted. But I just felt like back to back to back to back, we were not getting offers accepted because there were 20, 30, 40 offers on these homes that were just outrageous.
No, it was tough. I'm actually struggling at the moment getting offers accepted. It's partly due to, where some of these clients are with regards to prices and being maxed out and not really being able to go to certain areas. But yeah, it's a changing market. I haven't seen the deals yet out there. We'll see if they come. I'm not a huge believer that we're going to see a lot of opportunity. Yeah, there will be some. You'll be able to find, here and there those opportunities, but it's not going to be, the common thing in the market at the moment. And I don't know that when it is actually. So it'll be interesting nevertheless. So something I saw, I was scrolling up here a moment ago, Dan, is earlier you commented on Nightbot. Well, one of the things Nightbot does in there is you can put in like emojis and stuff. Like if somebody comes in with a bunch of emojis, like they'll stop. So David Yang, sometimes they come up with this language themselves. It's hilarious. And then people like start to get defensive about Nightbot because they also think that Nightbot's real. Like, dude, I was just sitting an emoji, like back off. Anyhow, Usama gave us a $2 super chat and tell us that the average home in the U.S. is 8.2 times the salary now. That's unsustainable. So maybe in some markets that's the case, but for the majority out there, I don't know that that's going to be the factor that brings prices in line at the moment. Wages are actually increasing, believe it or not, but a lot of it's getting eaten up by inflation at the moment. So the next couple of years will be interesting nonetheless.
Here's the other thing that I think you brought up yesterday, Jeb, is that, the unfortunate truth is that there's more and more of a gap between lower and upper class as far as what people are making. And majority of people that are coming to us, coming to me and wanting to buy a house, they don't just have a salary. They have some equity from another property they sold, or they have investments, or they have money from their family, or whatever it is. That's the unfortunate truth is, if you're just a blue collar worker, or if you have an average job here in San Diego and you want to be able to save up to purchase your first home, it's not going to be easy. And you're probably going to have to start with an attached property, a townhome, a condo, or something like that in order to get your foot in the door, gain some equity, and then have an opportunity to ratchet up to the next property after that at some period of time.
I like it. That is sound advice, nonetheless. So we're going to end up here, finish it up in just a second here. Let's see here. So Ambrose, I think is probably our biggest commenter tonight. So thank you for being here. I don't know if I missed it at the beginning of the live, but could you both give a quick inventory update in your market? So Orange County currently sits at 4,054 properties as me coming on the show. Some context, this time last year, we were sitting at about 2,500 homes. So we have 35% or so less homes today than we did last year. 35% more homes than we did last year. And what was I going to say? 2017 to 2019 average, which is important, right? Because that was a time in the market where, buyers and sellers kind of on equal playing field, if you will. Still kind of a slight seller's market, but things were selling. This time, we'd have about 6,700 homes on the market. So considerably more than we have at the moment. I think where you are, Dan's probably similar.
Yeah, it's very similar. So in January of this year, I think we had we were just around 1,200 homes available in a county of 3.35 million people.
Yep. We had 954.
Oh my gosh, it's so to go back and think of that, it's just crazy. And by all my estimations of all the data that I've pulled in and analyzed, is we need somewhere between 10 and 16,000 homes to have a true neutral market over an extended period of time here in San Diego County. Right now, we're right around where you guys are. So we are at I just missed this, 4,800 homes. So we're almost at 5,000 homes. It's only increased 3% in the last month. So that increase is starting to level off, and we're seeing the seasonality is starting to kick in. So right now, every year near the end of summer, inventory starts to decline as we get into the winter months, because there's fewer people wanting to move, fewer people selling, fewer people buying. And we're starting to see we're hitting the top of that. And if you look at it against other years, it's just going to start coming down.
Good stuff. Maddie, $10 super chat. Thanks for a great show. Appreciate you, Matt. Show up every week. Put in your 2 cents and give support, and I appreciate that. Matt also said that he traveled from Baltimore to La Mesa around 2000, following 2 other cars. So similar trek there. Mine was 2002, but you were 2 years ahead of the trend. You're the trendsetter, my friend. But here we are, been almost 2 hours in. I want to thank you guys for being here, for the support. Dan, your channel. So Dan, again, for those of you who haven't been here the whole time, channel's about San Diego real estate. It's not only about real estate. I mean, really some local spots in San Diego, really kind of takes you on the deep dive of different neighborhoods, different everything in San Diego. So check out his channel. Dan Parker, Living in San Diego, I think is the channel. His Instagram handle is there just below his name. You can check him out that way. I will re-edit the description in this, put your contact information in there because it was kind of last minute, and put you in there if people want to find you. But I appreciate you being here, dude. Appreciate, all of you guys watching us. Hit the thumbs up if you liked it. Leave us a comment. Subscribe to the channel. All of that good stuff. Dan, parting words?
Parting words. I just appreciate you, man. And I appreciate Maddie, because thanks to Maddie, when we finally go play golf, first round's on you.
It's inflation. That doesn't get a round. I'll buy you a cocktail napkin with that, $10.
Touche. We'll figure it out.
Fair enough. I will definitely do it. But guys, thanks again for the support. This will be on the Educated Homebuyer podcast on Friday to listen to it once again. If you didn't hear it all, you can go back and listen to it or watch the video. But until then, we appreciate you being here.